This is Fundraising Radio, and today's a guest speaker. We have Brett Lewis, Global Business Development Lead at Google and a co-founder and CEO at SkillBridge that was acquired by TopTal. And in this episode, we'll talk about business development at Google versus business development at an early stage startup. So we'll compare Brett's experience at Google and Brett's experience at TopTal. So Brett, let's kick off by you giving us some background on yourself and on SkillBridge.
Yeah, thanks a lot, Constantine. So first off, congrats on everything you've been doing here. I think the radio station's awesome, and thank you for inviting me. So I mean, not sure where to begin, but to make a long story short, I guess my career mostly was in strategy consulting after college. I worked at Bain & Company for a few years in London, and then when I went to business school at Wharton, I got a lot more interested in like the startup venture capital ecosystem in general. I spent a few months working at a VC fund in Brazil. And during that time, I sort of started seeing all the great work that startups and founders were doing, both in the US and in Latin America. And I was kind of like, I really need to try my hand at this. I'd had a few kind of entrepreneurial ideas and things that I had done earlier in my life on kind of a smaller scale. And the beautiful thing, this is back in 2011, 2012, was kind of this idea of, the agile framework and like failing quickly. And, it just became so much easier and cheaper to start a company than it had been basically forever before then. And so myself and a couple friends batted around ideas for the entire summer. What could we, do that obviously had a need? Like what was a pain point that we could fill for customers? But also, where do we uniquely have a skill set? What could we leverage that was a bit different and differentiated from other people? And what we landed on was this idea that there was a lot of there's an emerging freelancer marketplace that was happening with the likes of Elance and Odesk and Fiverr, and now there are many others, TaskRabbit and so forth. But there wasn't much that was kind of capturing this more premium end of the market for people like ourselves who had kind of more of a business background in finance, consulting, marketing, and things like that. And so what we said was there's a lot of people like ourselves who don't want to be tied down to a 9 to 5 or to an 8 to midnight, 4 or 5 days a week anymore. And there are a lot of companies of all sizes, from very small companies to Fortune 500 companies, private equity funds, that need access to really high caliber talent, but don't have the budget or the need to bring on a full-time employee necessarily, or to hire the Goldmans or Bains of the world with like a full team for $1 million a month or more in some cases. And so we were kind of tapping into what now during COVID has become quite obvious, which is that people can work in a distributed manner pretty effectively. So that's sort of the backdrop. That was kind of the like aha moment for us. There were a lot of people like ourselves who were willing to do work, like we had extra capacity, and a lot of companies that wanted great people but didn't want to make the commitment. So that was sort of the marketplace we were building. And when we went back to business school for our second year, we pretty much spent the entire time working on it. And so we founded SkillBridge, myself and my co-founder Raj Jayakumar, and we, I'll let you ask some questions, but basically we took advantage of all the resources that we could possibly find at Wharton and more broadly, in terms of building a business plan, getting our first customers, getting a product out the door, raising a bit of venture funding, and so forth. And I'm sure we'll talk about all of that, but just to quickly finish, I guess, the who I am part of it. We ran SkillBridge for 3 or 4 years. We eventually sold it to a company called TopTal, was and is also a freelancer marketplace. It was more focused on engineering talent at the time and wanted to build out a business vertical. And then after that, I spent a little while working in investing and then moved over to Google about 3.5 years ago, where I work in business development and partnerships.
Nice. That's really cool. Congrats on the exit and on work at Google. That's really cool. But first question that I want to ask you here is the very beginning of the journey. What do you think was the major factor that really allowed this business to exist? Is it the fact that you had, great co-founders? Is it the fact that you've brainstormed this idea for like 3 months of the summer and you actually like really put a lot of thought into what you can do with your specific uh, talents, skill set of the team? Or what was that major factor that you think made the company successful?
I mean, I'm trying to avoid cliches and stuff, but I think those things all mattered, I guess, to an extent. So we did spend a few months really whittling down a lot of ideas. I don't know if this is necessarily the best way to do it, but we essentially put down like on paper 25 things we thought could be interesting and could work. Then we would each sort of like almost pitch to each other, like, here's why I think this is actually what we should spend time doing, and essentially convince one another. There were three of us at the time. It ended up just being two of us that were co-founders. But I think that was a really good process because people have a ton of different, perspectives and ideas. And if you get a couple people that you respect and that you work with, and you sort of pitch each other, like you're going to have to clients and customers and venture funds if you want to fundraise. That's a pretty good process. But then I would also say, like, I couldn't have done any of it without my co-founder Raj. We had similar backgrounds in some respects, but also very overlapping skill sets. He ended up like really loving kind of like the product and technical side. He wasn't a computer science major, but he did, I think, physics at Oxford. So he was a very technical guy, and I was very commercial. That had been sort of my focus. So dealing with clients, contracts, fundraising, things like that. I really enjoyed that process. So I think having the great team is super super important, especially if it's your co-founder. I mean, you're like marrying this person through good or for ill, and there are going to be highs and lows, and so that's obviously fundamental. And then obviously there's everything else that followed on from that in terms of clients and product and all that stuff.
So let's start there where you mentioned that you basically used every resource that you found at your university. What was the best one that you found there that you actually like discovered and you're like, oh, that's actually helpful. Let me use that.
I think there's so many of these things now in terms of
Yep.
venture programs, business plan competitions, fundraising. Um, I don't know. To be honest, I don't think there was like any one thing, and I don't think there ever will be any one thing that can like make or break your business. I think for us, it was just being like kind of accepted into these communities, gaining access to other like-minded founders was probably the most important thing. Your business is not going to be successful on the back of a business plan that looks really good. And getting some funding, which we got, can certainly be helpful. But it's also not going to determine the success of your company. I mean, that's really, you almost have to make sure you're so focused that you're not being distracted by these like things that seem like they're wins for you, but they're actually just sort of very incremental. So I'd say for us, we did this venture initiation program at Wharton. We were finalists in the business plan competition. We worked with First Round Capital's dorm room fund. All that stuff was awesome, but probably mostly just because you start to accept some of this wisdom through osmosis from other founders. And that can be really helpful, and can keep you honest, and people can kind of push you and make you think about things you hadn't thought of before. But at the end of the day, you're building a company, and none of those things will do that on your behalf. There's kind of just like the blood, sweat, and tears that you need to put in to the day-to-day kind of blocking and tackling. And no fund or program, in my experience, will do that for you.
Most likely not, unless you're working with a venture studio where we actually like dedicate some team members to work with you. But it's just self-promotion here a little bit. Let's talk about business development. Can you like define the business development? For me personally, it's like developing really good business relationship with potential partners, probably even fundraising at a startup if you're doing business development at a startup. But for you, what is the official definition of business development?
Yeah, it's a really good question. And it completely depends on, I guess, two things, both the stage of the company and the stage of the product you're working on. So at SkillBridge, obviously, as a founder, co-founder and co-CEO, BD basically just meant like, I mean, it was so much more than traditional BD in the sense that it was not only just finding clients, but it was really understanding like what clients cared about and how that affected our product,
Mm-hmm.
and how we were eventually going to scale and things of that nature. But I guess before that, I mean, business development, as you said, I think is developing potential partnerships and deals with clients or other big companies. So at Google, it typically means going and working with other very big companies, and discussing like a value exchange in a way that we can maybe share part of our technology and they can share part of their platform and distribution channels. But it's essentially finding ways that you can work closely with another company or with a client. And it is a little bit of a vague term because it really depends on if you're talking about like new business development, where it's a product that's hot off the shelf. And you, in a sense, in BD, you are still figuring out product strategy because you're hearing what your partners and what the market is
Mm-hmm.
you as feedback. And then you're working really closely with product and engineering for them to change the product as they might see fit. Or if it's more mature business development, it's kind of like, this is our product. We know that it will work for a lot of partners and clients out there. So let's go and just sort of tackle them one by one. I have always, obviously at SkillBridge, but also at Google, been on the newer business development side of things, where I work with our product and engineering teams almost more than I work with partners because there's so much kind of internal figuring out of what the product needs to look like, what the feature set has to be, what the partners care about, what they're willing to accept, what they're not willing to accept, before you actually get to a term sheet and a deal. There's a lot of that kind of upfront work on the newer BD side, which is what I've usually focused on.
Right, right. So let's go a little bit back to what you just said, which is basically understanding what the clients need. And that's the question that I didn't plan to ask you, but it just popped into my head because just yesterday, two founders asked me the same exact question. Like, I had problems with my previous startups. One of the major problems that I got was like collecting that feedback and putting it into something sensible, not just like trying to add every single feature that my potential client or my paying customer tells me to add because it's cool.
Right.
So what's your process on that when you were doing business development at SkillBridge? How did you aggregate that all of that feedback and actually made something that made sense? Was it some specific table or was it just literally on a list of paper? How do you approach that problem?
Yeah, I think that one of the biggest tools you have as a founder, in a sense, is that you are just so strapped for resources and for time that it almost sends you into hyper focus drive because you have no other choice. In our case, we had a CTO and we had two engineers on average, depending on which year we were talking about, but it was a very small team initially. For the first maybe year or 2 years, it was less than 10 folks. And so because of that, you are so driven to minimize any unnecessary work because you just basically can't do it. And so I think we found that was at the end a very good thing for us. We ended up doing a Highland Capital program as well over the summer, and I think one of the pieces of advice we got from one of the partners there was, if you can fundraise, it's not a bad thing to do because it means you're going to have runway for another 12 to 18 months or whatever it is. But one of the worst things for startup is when they actually end up raising too much capital because they do all the about. They build stuff that isn't really critical. So to answer your question practically, I mean, we just spoke to as many customers as we possibly could, and we did it before we had a product. So we went out and we would survey Fortune 500 companies, we would survey private equity funds, we would survey startups, all of these clients that we thought were part of our addressable market, and heard what they wanted from us. And that was relatively straightforward. They were like, I want access to really high quality talent at an affordable price. I'm not going to go hire a big firm for a lot of these things, but I do need help and I do need to be flexible. So that was pretty clear. It's kind of like, okay, like, we understand the market that we're building here. And then the devil was in the details. We found there was a lot of work that was required for kind of scoping projects, for project management, for payments, for escrow accounts, for holding people accountable. And that was stuff that we just sort of realized by actually doing this work. And it was kind of like, where are we spiking in terms of time that we're spending doing stuff we don't want to do? And so a lot of that was what we started building into the product was how do you make these templatized, and how do you put these milestones in place so that we can increasingly remove ourselves from this process. And so actually, I think in our case, it was a lot more understanding what our clients and our freelancers needed that they didn't necessarily know that they needed, but we needed to make this process move a lot smoother. Because at the end of the day, we were selling talent and we were selling sort of output and projects. We weren't selling widgets that were just like cookie cutter. So for us, it was all about like process improvement.
Mm-hmm. Right. Yeah, I'm totally a big fan of that methodology, where you just start doing everything in a very stupid, robust way, where you do a lot of stuff by hand and claim that it's AI doing it or something like that. And then you actually start substituting some parts of it with technology. I think that's the only way to build it out. But let's talk about the major subject for this whole podcast, which is fundraising. How did the fundraising go for the SkillBridge? What did you do there? How did you raise specifically the very, very first round of money?
Yeah, it's a good question. So I think, one of the great things about being in a place like business school is you just have like tremendous access. And those networks can come in a variety of formats, right? It can be like you're in Silicon Valley, or you're part of a larger tech company that maybe spun out some people that are now angel investing. I think those networks can come from a lot of places. I think the thing for us was we had really great access. So I was listening to an interview about John Foley, founder of Peloton, and I felt a little bit like him because he could get into any room, but people were kind of like, "You haven't done this before. Like, why should we believe in you?" And I think for Raj and I, it was kind of the same. It was like, okay, we could like network our way into almost anything, but it was like once we were there, how could we prove that we could be founders of a company? Because our backgrounds typically had been more kind of corporate finance, things of that nature. And I think in our case, what really, really worked extremely well was having revenue. So kind of like we were just talking about, we did a lot of this manually. We did a lot of it by hand. We totally faked it until we made it. But we had a dozen clients, and we even had 3 or 4 of those who were repeat clients. And I think, and some of them were brand names. We had Estee Lauder, we had Warby Parker, we had General Catalyst. There were a few of these kind of big brands that really liked our product. And as you know, I think so many people are trying to raise money way too early. And I understand it, right? You're not working, like you need capital to keep the company alive. But I think it's so much more powerful if you can show that you have some degree of product market fit, right? The addressable market is always a big question mark. How fast you can scale is a big question mark. But if you can show that somebody actually wants to buy your product, back this when Kickstarter was all the rage, I think anything that shows that there's demand out there is super powerful. And so for us, I think that was really the key. We recruited a great first CTO, and we had a handful of clients. And that was enough, I think, for the beginning, right? Because we were raising relatively small rounds, and that was enough to get us over the line. And then then the clock starts ticking, right? Which I think is a big consideration for when you want to raise venture money, if and when you want to raise venture money, because everybody's going to want to see within 12 months, like you've hit the next milestone, and it doesn't give you a lot of time, and it does make you sometimes do things you wouldn't otherwise do because you're just trying to scale so quickly. But yeah, to answer your question, I think in our case, it was having clients and having a good team, which were good.
That's pretty much the golden bullet, the silver bullet. I keep confusing golden and silver bullet. But yeah, I mean, having traction, some good traction, and a good team, that's you're done. You raise money. But if you could go back in time into the beginning of that fundraising process, would you change anything? Would you like make the round bigger, or would you maybe reach out to strategic investors instead of just angel investors, or maybe you would reach out to very early stage VCs, or would there be something that you would change?
Yeah, maybe. I think in hindsight, like when you're fundraising for the first time, I think anybody that's able to write a check. But there's a lot of different, venture capital funds and angels and things out there. I think in our case, we kind of sprayed and prayed way too much. Like we kind of were like, let's just make a list of sort of 30 investors that we know, whether or not they're angels or funds, whether or not it's a small fund or a big fund, and kind of went out there. And I think, it ended up working out okay because we were able to make inroads with some pretty good places. But I think in hindsight, we probably should have been a little bit more strategic with kind of approaching angels first. I think the first couple of rounds, or even just mirror the first round, you want it to be not necessarily the best venture capital funds you can find. You want them to be the real evangelists of your product, like people who just love what you're doing and really, really care and want to help you. And then I think once you get a little bit bigger and you have a little bit more data you can point to, then maybe you want to go to more of kind of like the big brand names, who will give you more time. But we were kind of doing all of those things. Like we ended up in the room with very sophisticated, larger funds, who thought this was an interesting idea, but we weren't ready for that. And then I wouldn't say we burned any bridges, but then you kind of have to go back a year or two later and explain how things have changed and kind of the progress you've made. So I think what you really want to do at first, whether or not it's angels or maybe slightly more, out of left field venture capital funds, I think you want to find the people that like really, really believe in what you're doing and actually want to get involved. And of course, if they have relevant experience, like in our case, like marketplace experience or professional services experience, that's probably best. And then if you want to, you can go talk to the fancy, Kleiners and Andreessens of the world later on. But I would be a little bit more strategic about kind of the nature of these funds and not getting too far out ahead of your skis, because it can just become very distracting. And ultimately, you might want to talk to them, but you want to have those conversations when you're more prepared.
Right, right, absolutely. And one more time traveling question kind of thing. If you like looking back at your journey with SkillBridge, like all the way up to the acquisition, what do you think was the major thing that was like slowing you down? Maybe it was like on the first round you gave out too much equity and the investor was slowing you down, or maybe there was some client or whoever it is. What was the thing that you made that kind of slowed down the process?
I think in our case, I'm seeing a theme here, so maybe this is something I need to think about. But I think we also went after probably too many different kinds of clients, and we ended up trying to build a product that was, okay for everyone, but wasn't maybe exactly what like a smaller segment of our client base needed. And what I mean by that is we sort of thought, well, a marketplace by definition, you sort of bring the supply, you bring the demand, they find each other, and then off you go. You kind of remove yourself from the equation, and you have this great, highly liquid marketplace. And I think that eventually that's probably where you want to go. And I haven't studied the Etsy's of the world in great detail, but I do think there's a lot of value to starting with like an incredibly narrow focus and getting that perfect, and then maybe that's enough for a long time. Or you can slowly add kind of some adjacent markets. But in our case, we were sort of like, startups need great people, huge corporates need great people, investment funds need great, like everybody,
Yeah.
everybody can benefit from this. But at the end of the day, those are actually incredibly different, sales processes. The way you get the approval to be a vendor at a large corporation is actually like a 6-month process. Um, Whereas if it's an investment fund, you call one of the partners and you're like, hey, do you have like 3 months where you need like some crack person that can help you. And so I think that was probably one of our mistakes. And then startups, in general, I wouldn't recommend selling to startups,
Yeah,
because they don't have any capital and funds, which is perfectly right. Startups shouldn't be spending money on unnecessary things. But I think that was probably it. I think being ambitious and wanting to do a lot is great, and you need that. But I think you really have to like nail a couple of things before you try to do more. And in our case, that wasn't. I don't think we didn't realize we were trying to do more, but those are very different market segments at the end of the day. And I think you need to stay hyper focused and nail it before you can do more.
absolutely. Perfect advice here. And now that we've discussed your mistakes, let's talk about something that you're really proud of. So, what's the thing that you've done at SkillBridge besides, starting a successful company? What's that thing that you've done there that you're the most proud of? You look back at it and you're like, I did that. I'm good.
That's a good question. I mean, I was just really happy with the fact that we survived as long as we did, and made it as far as we did. I think there's some things I can point out. Like we had a great team. Like we had a great culture. We had a lot of fun. There weren't, like, you hear all these dramatic stories, and there were difficult times, and there were some people that worked out and some people that didn't. But there weren't any of these calamities that you hear about more and more, in like tech press. But I think honestly, more than anything, just like the failure rate of startups is so high, right? I mean, I think everybody needs to go in eyes wide open with these kinds of things. And we were with some really talented people, who, beat us in some of these like business plan competitions or raise more money or whatever. And for one reason or another, be it regulatory or just the product market fit wasn't quite right, they didn't last very long. And SkillBridge not only lasted and persisted, but joined a bigger company and helped them build out a whole new business unit, for TopTal ultimately. So I think all of that was really really exciting, and it just came on the back of like every day by day, week by week, just trying to win more than you lose. And I think that ultimately is like the most gratifying feeling.
Right. Yeah, and that's true. I mean, congrats on that. Congrats on that. So let's speak about the acquisition just a little bit. Do you actually plan for it? Did it happen like quickly, or was it completely unplanned, random event that just occurred?
Um, so I think at the outset, Raj and I were pretty open to any kind of potential outcome. We founded this company. We said it might not work very quickly, and that's fine. At least we will have tried something, and we will definitely have learned something. And then I think basically every 6 to 12 months, you kind of reevaluate. You're like, okay, how are we doing? Is this good enough for us to keep spending time on? Yes. Okay, that's great. Then where do we see ourselves going, in the next year or two? Do we want to be an independent business? Do we want to eventually get acquired? What's our goal? And so I think the idea of working with TopTal probably emerged around like the third year or thereabouts. Things were going really well, but it wasn't a software company. We probably weren't going to go public. And so an acquisition, I think, at some point seemed like it might be the right avenue. And then there's a bunch of these kinds of marketplace companies out there, which I think is great, and I do still think is the future of work. To have this flexibility for people that need it. I think there's so many inefficiencies and unnecessary friction in finding a job, and in suiting your lifestyle. If you want to work 100% of your time or 50% of your time. So I'll get off my soapbox, but I still think that this is kind of the future of the way that labor needs to operate. But so we were part of this community of marketplaces, and specifically kind of talent marketplaces, of which TopTal is one of the biggest and best known, specifically for engineers. And it just seemed like it just sort of made sense after the third year or so. So we hadn't planned on our exit when we started. I think we were always open to any outcome. And this one just kind of emerged as making the most sense, 3 years kind of into the process when we had grown a business. But as I said, we kind of knew it wasn't ever going to like be an independent company that we were going to take public. So that seemed to make the most sense.
Right. Yeah, and that's how usually things go. And congrats on the acquisition again. Now, last two questions. First is, as an exit founder, do you do any sort of mentorship or angel investments for other startups, or do you just keep focusing on Google?
Yeah, Google is obviously my full time job and then some. But yeah, I love mentoring and angel investing. Those are both areas I'm passionate about and hope to do more of in the future, especially as New York, where I'm based, becomes more of kind of a tech hub and tech ecosystem.
Mm-hmm. Yep.
I went to high school here in the city, to a math and science school called Stuyvesant, and there's a lot of founders actually coming out of the school. So I've been doing a lot of mentorship of folks that are like 5 or 10 years behind me. So that's been a lot of fun. And yeah, I've been getting more interested in writing sort of angel checks, either through like different angel networks, or as they come to you. As you know, this is all very like
Yeah.
organic and stuff at this stage. But yeah, I think those are both fast. I mean, they're super fun, right? It's really fun to mentor folks and to feel like you might have some sort of information you can share that would help. And it's just so cool. You can kind of live vicariously, either through mentoring or investing. And I still think sort of innovation and technology has a lot of good that it can do for the world, in shaking things up. I think this weird time that we're living in now is a great example of how there are a lot of different lifestyles and working
Mm-hmm.
styles we never really thought about that are actually pretty possible. So I think it's a super exciting time to be involved in early stage companies.
That's true. That's true. And good point. Happy to hear that you're still taking active part in the giving back to the other founders that are younger than you. But let's talk about last thing, call to action to my listeners, to the founders who are listening to this one. What's the one thing you want them to do as soon as the episode is over?
Oof. I guess I would say if you're building a company, for your own sake and for your own valuable time, I would, as uncomfortable as it may be, I would look at the facts as objectively as possible. And I think that applies to everything, to fundraising, to your product, to your team. But the one thing I would say is most important is feedback, and taking feedback, most importantly from your clients, and not sort of having rose tinted glasses, but really trying to see the world as it is. Because I think so often as a founder, you're so enthusiastic about something that you sort of morph things into being what you want them to be. And it's really uncomfortable, but I think really critical to hear feedback like exactly as it is, and know when things are working, or more often than not when they're not working, and just becoming really comfortable with addressing areas that need to be addressed, as early as possible, so you don't waste your time, because that's the most important thing you have.
Right. Yeah. Don't waste your time. Damn it. That's a good good advice, and definitely follow that. My personal call to action will be go to the description of this episode. I will leave a link to Brett's LinkedIn, of course, and also to another episode about the quick acquisition by Lyft that I personally liked a lot. So yeah, if you're curious about other acquisitions, definitely take a look at the description of this episode. And as usually, have a good day.